Hello, everybody. Ahron, you can turn on your video. I just want to say welcome to everybody. This is our second webinar in regards to PPP. The first one was the entire CARES Act, and we talked a little bit about the PPP at that point. Lots of interest, and a lot of people had a lot of questions, and after the seminar and as new guidance came, we sent updated emails and more responses to the questions. This time will be very much the same. We're going to hear from Rabbi Cohen and Ahron Golding, and we will not have all our answers today, but as more guidance comes out, we'll make sure to keep you guys updated. Also, any questions that anyone posts in the Q&A or in any other places, if we don't address them now at the seminar, we will address them in future emails. So everyone should be able to, we'll have access to all their questions and hopefully their answers. May not be the answers they want to hear, but it'll still be answers. That being said, let's jump right in. So we're going to talk a little bit about, we're going to start off with Rabbi Cohen, Rabbi Abba Cohen, a little bit about Rabbi Abba Cohen. He's been involved in Jewish public life for over 35 years. He's been working with Agudath in Agudath's Washington office. He's engaged in protecting and advancing religious and civil rights, promoting the interests of faith-based schools and institutions, yeshivas, in our language, speaking out on contemporary social and moral issues, and safeguarding the security of Israel and endangered Jewish communities worldwide. Rabbi Cohen is going to briefly list some of the things we're working on going forward: the PPP, the 500 plus employee issue, charitable deductions, increased education assistance, unemployment insurance reimbursement. He has a call with the House Ways and Means Committee right after this, so he's probably going to drop off a little bit early. And I must say that I've seen some email correspondence with some of the larger yeshivas or other organizations with Rabbi Cohen in regards to these topics. Very well versed in this, and it's been, my understanding has been really into it in the Washington level. And after that, we'll hear from Ahron Golding. Ahron Golding is our tax attorney in-house at Roth&Co. Saves clients lots and lots of money, and he's going to talk about the PPP forgiveness. Rabbi Cohen, it's all yours.
Okay, thank you very much. Do you hear me? Do you hear me okay?
Yes, we do.
Okay, good.
Loud and clear.
Thank you very much for the, first, thank you very much, Zacharia, for the introduction and for the pleasure of joining you and participate in your important community work, in getting important information out to individuals and institutions at a very critical time. I'm going to talk, as was said, I'm going to talk a little bit about the kinds of issues that we're going to face in Washington at this juncture, looking at future CARES Acts or future phases, as we call them. But I first want to talk a little bit about atmosphere. You know, in legislation, there are two aspects to legislation. One is the legislation itself, and one is the atmosphere, the milieu in which Congress is considering the legislation and the administration is considering the legislation. And in terms of atmosphere, I just wanted to say that it's very different today than it was just a few weeks ago. Then, a few weeks ago, there was some politics involved, obviously. You know, what's life without politics? But they were very eager to pass legislation. They knew that it was a crisis. They knew that something had to be done. And they knew that they had to, even if it wasn't perfect, they had to get something out. And most of all, the members of Congress were eager to go home. So they passed that legislation, and there was bipartisanship, and there was agreement on many issues. Of course, later on, we had to fix many issues because they worked a little bit too fast. But now, it's a very, very different atmosphere. It's much more polarized. It's much more partisan. It's politicized. And there's more of a drag on moving forward. There isn't that same enthusiasm, at least not on everyone's part. There's not that same enthusiasm to get something passed again and exactly what to get passed again this time around. And I think more than anything else, this issue now more than anything else has become very much a central issue in the election. And now that it's part of the election, anything that each side does or wants to do or doesn't want to do will be determined by its election value. So that's a very different kind of calculus, and it's causing things to slow down, and it's causing disagreements, and it's causing a breakdown in talks. So that atmosphere is very different than what we had in the past. And I think something will happen. I think maybe later rather than sooner. I think something will happen because I think everybody agrees that more must be done. But I'm not going to prognosticate whether, what exactly it's going to be. But in the meantime, our work, whatever the atmosphere is, our work continues. We have to be in contact with the community. We have to be in contact with our institutions and our individuals and see what the issues are that we continue to confront and try to anticipate some of the issues that will come up in the near future. So I've highlighted a few issues that have sort of percolated to the surface, particularly in regard to nonprofits and other institutions in the community, our mostos, our yeshivas, and that's what I wanted to talk about. So the first issue was what Zacharia had mentioned before, the issue of in the PPP program, which is a vitally important program, a critical program for our community. There is this requirement, or let's say there's this limitation that it does not apply to 500 plus employees. It does not apply to nonprofits that have 500 plus employees. Now, of course, the PPP was meant to keep people on the payroll, and it was meant to keep businesses alive. And one of the big victories of the CARES Act was that there's explicit inclusion of nonprofits in that bill. That was not an easy accomplishment. That was very hard, and many of us were involved in that effort. First of all, nonprofits were not part of the SBA program to begin with, but in general, to include nonprofits, the whole nonprofit sector was a big accomplishment. And taking that a step further, including religious entities religious entities within the scope of nonprofits was also a very major step forward. That's never an easy thing to do. Sometimes we're successful, sometimes we're not. Baruch Hashem, in these past few years, we've been more successful, but including religious nonprofits is something that had everyone's support and was included in the bill. Now, this 500 plus person employee requirement has been a big stumbling block for our mostos, for not all of them, obviously, but some of them, some of our bigger mostos. And they have been reaching out to us and other firm organizations for some kind of relief. And we've raised the issue. And it's become one of the central issues on the part of the nonprofit world. It was clear that, the 500 plus employee issue was really geared to, big businesses, not to nonprofits. And some adjustment had to be made. And I think there's an understanding whether it's a waiver, or whether it only applies to full-time employees, or whether there's got to be some kind of alternate standard. But I think there's an understanding that the 500 plus employee limitation has to be dealt with. Those of you who might have been on the call that we co-hosted last week with Senator Schumer heard him say that in pretty strong terms that the 500 plus person requirement has to be eliminated, quote unquote, whatever that means. So that's a very big issue that we're working on. It's front and center in the negotiations that we're having. The second issue I wanted to highlight relates to the charitable deduction. Under the CARES Act currently, there is a $300 charitable deduction. It's capped at $300. And clearly, we all know, we all understand that $300 is not much of an incentive for people to give. And it's not much of a help for our mostos that need funds. So there's an amendment that's being proposed by Senator Langford that will raise the limit from $300 to $8,000, and also make it retroactive back to 2019 taxes. So even contributions that you're making now, which would normally be on next year's return, can be taken off under this proposal, even on the current 2019 tax return. So that's another avenue that we're pursuing to help nonprofits. Third, the third area is what we call the Shake Shack problem. You might have, whether it's Shake Shack or Ruth's Chris, wherever you eat, you would be familiar with it. But this is the problem of big companies participating in the PPP program. And you know, really, these are big companies, wealthy companies, and they're still participating. Many of them have given back the money. Some big institutions like Harvard University and others, you know, they've given back the money. And unfortunately, Secretary Mnuchin has called out these institutions and specifically targeted private schools for taking money that they shouldn't be taking and encouraging them to give it back. Now, of course, we know that the private schools that he's talking about are not our private schools. They're not our yeshivas. And the problem is that, I'll tell you what the requirement is. It states that when the organization certified that a PPP loan is an economic necessity, they must take into account other sources of liquidity sufficient to support their ongoing operations in a manner that is not detrimental to the business. Companies with adequate sources of liquidity to support the business's ongoing operations, right, are not the companies that are supposed to be participating in that program. So sure, if you have, you know, big institutions, that even educational institutions that have endowments and other kinds of, you know, legacy funds, sure, those are the kinds of private schools that maybe should give back money. But we're finding, we have like a little group in Washington, we're finding that there are houses of worship, and they're small faith-based organizations, and some schools that are seriously reconsidering their application for PPP based on this new, stricter kind of requirement. They're not quite sure what to do, and the best advice that we give them is you've got to, you know, talk to your attorneys, because yeah, there are new limitations, and it might be stricter, and it might be more difficult. And you know, and even the banks are issuing all kinds of warnings about, you know, being careful that you're really an economic necessity and you're really in terrible straits. So this is something that has come to the surface and has caused a number of faith-based organizations, whether they are houses of worship or whether they are schools and other kinds of charities, to rethink, reconsider their PPP applications, or even giving the money back as was mentioned before. I have two more. I can't give a presentation without talking about yeshivas, the most important institution in our community. Part of the original CARES Act was a Department of Education program. Part of the money went to education programs administered by school districts. Part of the part of the money went to the governors to use at their discretion. But one of the big victories that we had in the CARES Act was that there was a mandate that whatever education monies would be made available in regard to the COVID-19 virus should be shared equitably between public and private schools. The idea of equitable participation has been one that we've worked on for literally decades. We're getting more and more successful at it, more and more programs. We've gotten to the point that I think that it's pretty much understood that any kind of program that comes out from the Department of Education will be shared equitably. And therefore, in this program, in the Department of Education programs, equity is included, and the state and local authorities are aware of it, and the school groups are aware of it, our groups are aware of it, and it's something that we need to monitor and be very careful. The problem is that in recent days, there have been communications sent out by education groups, whether it's the NEA or AFT or other public school advocates, wanting to roll back the amount of money that our yeshivas or that all private schools, wanting to roll back the money that private schools are able to receive under the first CARES Act. And that's, that would be terrible in terms of the needs of the schools. Also, it would be terrible in terms of precedent. And that's something that we continue to raise, we've raised it with the department, that there shouldn't be any rollback of the funds that were offered public and private schools, and that in future legislation, we have to be very careful to make sure that private schools can participate, and they can participate equitably. And finally, I just wanted to talk about the issue of direct cash payments. There was direct cash payments under the CARES Act. It was I think $1,200 if a couple filed jointly, and $500 per child, and then at $150,000, the benefit would phase out. Just to put it succinctly. What we'd like to do is we would like to raise the $500 per dependent up to $1,500. Obviously, this is an issue for our community that could be of great benefit to our community. Going from 500 to 1,500 is not as big a jump as you think, because Speaker Pelosi, in her version of the cash payment, was $1,500 for dependents. So maybe they're expected to come up with a bill. Maybe she'll maintain that. We can go from 500 to 1,500. And the second idea is that I said there's a threshold of $150,000, and then it starts phasing out. Maybe that's from the perspective of only looking at things through income. But in our community, we have children, and you can't just look at a person's income. You have to look at a person's income and the expenses that are incurred with a large family. And what we're proposing is, $150,000 to a family of 2 is not the same as to a family of 9. So what we're proposing, and I'd say this idea came really from the people in the community, to for every dependent to raise the threshold another $70,000. So therefore, the $150,000 per every child, not only will you get money for the child, but you'll also raise the threshold, and that keeps more and more people in the game for these direct cash payments. So again, I'm going to stop here. This is just there are many more things to talk about, but I've already went over my time limit. There are many things to talk about and many more things we're working on. And I just wanted to thank you for this opportunity to give you a little taste of what's going on, what we're working on in Washington. So I'm going to hand it back to you, Zacharia.
Thank you, Rabbi Cohen. Must be very interesting days in Washington.
Yes. Well, I can't tell you. I haven't been in Washington in 8 weeks, so I can't tell you.
All right, I guess through Zoom is very similar. Either way, okay. Thank you very much. We're going to just move over, right over to Ahron again. For those who joined after my introduction, Ahron is our in-house tax attorney. Ahron deals with lots of penalty abatement, IRS audits, etc. Saves people a lot of money, and hopefully, with his guidance now, you won't need Ahron's services or anyone else's services if we try to be on top of the rules and regulations and follow the guidelines. So, Ahron, the floor is yours.
Thank you very much. I appreciate everybody. Thank you, Rabbi Cohen, for that backdrop. A lot of that backdrop, I think, will color what we're going to talk about. We're going to talk about a lot of the details for the PPP, and there's a lot of information to cover. I allocated approximately 45 minutes for this, so I'm going to try to condense it into a half hour, and I'll ask Zacharia to slow me down. This is a topic that I am very passionate about, so if I'm going too quick, please slow me down. We're going to talk about real practical questions that have been really storming in to the Roth&Co offices over the past few weeks with regards to PPP forgiveness, because there simply is not a lot of guidance out there. So we're going to try to do our best to share with you the law and the guidance that's out there, recognizing that things are changing by the minute. It's possible that new guidance will come out as we speak, and therefore this is not legal advice. What we're going to start with is a question that a lot of people are talking about because of the press that Rabbi Cohen mentioned about this, the concept of determining necessity, and do I really have to, think about returning the money that I got? So I'm assuming that whoever is on this webinar already received money or is expecting money, and we're just going to talk about forgiveness. But a lot of people are asking about the concept of, how do I know what's considered necessary? So the certification that a person signed when they applied for the loan is that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. The SBA guidance then said that we're going to take into account their current business activity and the ability to access other sources of liquidity sufficient to support their ongoing operations in a manner that's not significantly detrimental to their business. The SBA has promised to issue guidance. They have not issued guidance. I'll just say in short that what we are doing for clients that have larger loans, I know that the Secretary Mnuchin said that they're going to review every loan that's more than $2 million and maybe some under that. If anybody thinks that that is a possibility of happening and they want to protect themselves, we're actually recommending that they do a study and take a look at their projections, their cash flow, write a memo, explain, have a discussion in the board discussing why things don't look so good and what's uncertain about these times, and basically why the loan is necessary. It's just always good to have that documentation. So that's what we're doing. We don't have specific guidance about what determines necessity. That's something that each case is going to be fact specific. There is a safe harbor date of May 14th. They just extended it for a company to return those funds if they don't believe that it's a necessity for the business. I'm not going to talk about affiliation rules. That's a very complex issue. We're here to talk about forgiveness. There are people that ask me, are the loan applications public information? Obviously, those that are public companies, they're going to make filings with the SEC, so that might be public. There are certain aspects of your loan application, even if you're a private company, that are subject to a FOIA request, a Freedom of Information Act, and the Wall Street Journal and other members of the press have already made the FOIA request to the SBA. Your particular, tax information that you go in your loan application is not public, but the loan amount, the names, that type of stuff will be public information. I just want to discuss the general idea of what the PPP program was for, because that's really what you're going to come back to whenever we're going to figure out discussing details of it and which way to go. The bottom line of the PPP program is it's to retain workers and to maintain payroll, make mortgage interest payments, lease payments, and utility payments. The bottom line is the closer that you keep to the purposes of the program, the safer you're going to be. And therefore, you're going to want to document everything. If you are a business that's not so good with records, this might be a good time to think about getting somebody on board that's going to be able to take those funds and be able to document everything. There are people that are asking, do they need to open up a separate bank account? It's more important to have clear documentation than the separate bank account. If the separate bank account will help, then by all means, please do that. Jumping right into the forgiveness. In order to get full forgiveness, many of you know the basics. So we're going to get into the details, but the basics are the payroll, which we now know based on the SBA, is made up of salary, vacation, leave, health, and retirement benefits. Those payments, and we're going to get into the details in a minute, what's considered payroll costs, that should make up 75% of your loan amount, and that should make up 75% of your expenses. The mortgage interests, rent, and utilities that were in place before February 15th, that will be at February 15th, 2020, that will be up to 25% of your cost. The law also states that the expenses that are eligible for forgiveness are those that are incurred over 8 weeks. Those 8 weeks are determined from when you get the loan. So that's when the clock starts. Now you have 8 weeks to spend that money in these ways. You also.
So I'm gonna just butt in for 1 second,
Please.
because I know it's been bothering everybody. This has been bothering everybody. Is okay. I didn't get my money round one. I'm getting it round two. I only got it funded. For whatever reason, I only got it funded in the second week of May. There is no 8 weeks until June 30th. What's going to happen?
That is a fantastic question. The bottom line is the 8 weeks by law goes from when you get the loan. It makes no difference. The June 30th is when you have to get the loan, but that's not when you have to spend it. You have 8 weeks to spend the loan from when you get the money. That's the way it works. So we're going to talk about issues that arise because of that 8-week rule. In order to obtain forgiveness, even if you spend 75% of it on payroll and 25% of it on the allowable utilities and rent and stuff like that, you still have to maintain, in order to achieve full forgiveness, you have to maintain your employee count. We're going to talk about details, but you have to maintain your employee count that you had prior. We're going to talk about what that means, but you have to maintain your employee count. In other words, they don't want you laying off people, because the purpose of this loan is to keep people on payroll. And you can't reduce the salaries of those earning less than $100,000 by more than 25%. If you reduce it more than that, you're going to have a penalty, a reduction dollar for dollar of what you're paying them less. You're going to get less forgiveness. There is a grace period for that reduction, either in headcount or reduction in salary for those workers, that you have until June 30th to be able to make that up, either rehire them or put their salaries back up to where they were. Okay, now let's dive right into the details. What is included in payroll costs?
Let me just see if I have just a couple of quick clarifications. You might be talking about that later, just to confirm. Just one quick question. I would assume that 8 weeks from when you get calls from when you get the loan is probably from when the SBA approves, not necessarily from when the bank actually funded the account, or are we going with the date that the bank funded the account?
That's a great question. Common sense might say when they approve it, but it goes when they actually fund it. When the money hits you, that's when it starts. Okay. Any other questions that you want to?
We're good. Continue.
Okay, great. So I'm going to jump right into frequently asked questions. One of the questions that's asked in terms of payroll costs is, what if a business is closed? I can't open my business. I'm not allowed to open my business. So how am I supposed to pay my employees? So can I pay my employees if they're not technically working? If they're not working, they're not full-time employees. The bottom line is you could still pay employees and get forgiveness. The wage will count. They are considered, if you're paying them a full wage, they are considered full-time employees. The government just wants you to be paying these people so that they're not rioting on the streets. That's what they are looking for. So therefore, the goal is to pay them even if your business is closed. Now, of course, it's not convenient. All of the businesses are saying, give me more time. Let me at least, open up my restaurant when I can, and then I could use this money to pay them to restart. But government didn't do that. The government, at the time that they did this, we could ask Rabbi Cohen why, but they probably thought this would end at the time that they did this, would end sooner. But that's the rule. So therefore, the bottom line is you could pay your employees then. Next question. Does parsonage count as a payroll cost? This was a huge thing when this came out for those institutions that pay parsonage. The answer is yes. So the SBA came out with specific guidance. It is cash compensation. Is parsonage considered part of salary? Because the rule is that salary is capped at $100,000 per person. So what about if somebody, a Rebbe, earns $80,000 salary and then $40,000 in parsonage? The answer is parsonage is capped, because parsonage, the reason why parsonage is allowable is because it's considered cash compensation. And therefore, because it's considered cash compensation, it is subject to that $100,000 cap. So in other words, you take the salary that's being paid plus the parsonage, you have to cap that person's cash compensation at $100,000. Does the exclusion of payments above $100,000 include benefits? The answer is no. So if I'm paying employee benefits, that's one of the things that's allowable. So let's say I pay my employee $100,000, and then on top of that, I pay for his health insurance, and I pay for his retirement contributions. Those are on top of the $100,000, so therefore they are not capped. That's not cash compensation, and therefore that's it's not subject to that $100,000 block. Can we pay sick leave with PPP funds and get forgiveness? The answer is yes, but not on the same dollar that you took a credit. So if you got a credit under the FFCRA, the paid leave, and the employer is taking a dollar for dollar credit, you can't take that same dollar that you're taking a credit for and then say, I want forgiveness for that. You could take your money and pay your leave, any of the family leave, whether it's paid or not paid, but you can't get forgiveness on a dollar that you took a credit for. What about forgiveness for payments to 1099 contractors? I give people and I give them 1099s. The government has stated very clearly that that is not allowable we're not talking about the 1099 person himself. We're going to get to that. But here we're talking about the business that pays the plumber, the person who's going to do stuff and considers them a 1099 contractor. They cannot consider that a payroll cost for the purpose of the loan or for the purpose of forgiveness. The 1099 people are supposed to get their own payroll loan. Okay, how should owners pay themselves? That's a huge question and not something which was discussed very clearly early on, and out with guidance that you are allowed to, an owner is allowed to take their, what's called an owner's replacement compensation, their own profit replacement, and they will also be subject to that $100,000 max. They'll be able to get that 8 weeks. That $100,000 is an annual, so 8 weeks of that is a little bit more than $15,000. They'll be able to get that amount forgiven. Question that comes up often is, what about partners? What about people that get stuff on a K-1? So this is something where it's not so clear, but the guidance suggests that a K-1 income will also be allowable. If you want to make things like easier, that when you submit your loan application for forgiveness, that it will match the 941s and you want to put the owners on payroll, you could do that. However, for the purposes of loan forgiveness, K-1 income will work. So therefore, you're able to do that. There's a machlekes hapaiskim, there's a discussion in the authorities as to whether that's only if it's paid during this period or just allocated. It would be safer for you to allocate that amount and to pay that amount to the owners during these 8 weeks. It also would be nice, just to get back to our previous discussion about like proving need, if the owners or executives of a large company, public or private, if they're able to stop taking a salary or stop taking distributions or take a pay cut or something like that during this time, and they're just paying their employees, that would help a lot in the optics of being able to show, if anybody asks, what did you use this PPP loan for? This was not a windfall for the owner. This was something where we're struggling and we're just paying the employees. That's exactly what the program is for. So if you're able to do that, that might be a nice idea. Somebody asked about if a husband and wife are also on a, they both work for the company. It's not stated specifically in the guidance, but she should be able to be allocated her own $100,000 and get forgiveness on that. Now I'm going to get to a question which is a very sticky question, and I've probably received 100 questions, all of similar type. So I'll mention 3 of the questions, which basically encapsulates a lot of them. Can businesses provide raises or bonuses to their employees over the 8-week window? And will that be considered payroll and thus forgiven to meet the 75%? Next, is overtime allowed for employees? Is there a cap on the number of hours per employee based on other pay periods? Can we hire our subcontractors as employees during the qualification period? Is an employer allowed to offer incentives to employees to entice them to return to work and then report it as hazard pay forgivable under PPP? Bottom line with this, and I apologize for this, not to have more clear guidelines, but we're waiting for the SBA to give us particular guidance in terms of will bonuses be allowable. The safest thing would be to pay exactly as you have before. I believe that last question provides an opportunity for people to be as safe as possible. If you want to be able to provide more money to cover your 75% payroll costs, to be able to couch it in terms of a bonus because of hazard pay. I'm providing an incentive, and it's best if you document exactly why you need to offer them more money, especially if it's hard to get other people to come in. I'm an essential business, it's really hard. They have to find, daycare, their kids are not in school. I'm providing extra funds for them to be able, as an incentive, as a hazard pay for them to do it, and it's paid during this time period, that has a very good chance of being forgiven, a lot better than a large bonus for the owners. You definitely want to stay away from bonuses that are huge, they're not normal, and they're going to the owners. And even if they're going to individuals, bonuses that are just simply like windfalls and don't have any explanation for it, I would stay away from that until we have guidance. Okay, what about QTR? QTR is a whole separate topic. For those that know what it is, it's qualified tuition reduction. It's basically where an educational institution is allowed to provide as a fringe benefit to their employees and basically pay other schools either their own schools tuition and give that reduction, or directly pay other schools for them or their children. We do not have specific guidance about that. I do believe I have a proof from, if anybody wants, you could email, the marketing company at Roth&Co. I'll give you the proof that why I believe, but I believe in the guidance. I'll just give you the language that it uses in the guidance. It says, and other fringe benefits when it's talking about sole proprietors. So therefore, since it uses the language other fringe benefits and QTR is a fringe benefit, I believe there is a good argument that it should be included in the payroll. Workman's comp, again, it's not specifically stated, but there's a good argument to say that it's a payroll cost, which I have to do it. The state gives me penalties. I spend a lot of time trying to fight, workman's comp penalties in New York, New Jersey. So therefore, I believe a business would have a valid argument to say, well, you want me to hire my employees? Well, I got to pay the workman's comp. It's not specifically stated, but I believe there's a valid possibility of them doing that. I'm going to move right on to what I call the $660 billion question, which is...
Let me interrupt you for a second.
Please.
Let me interrupt you for a second. Okay, so just a couple of, I'm trying to monitor this, and a lot of people have a lot of good questions, and obviously we're not going to get to all of them, but some of these kind of summarize the common interest. So the question I'm seeing a lot of over here is, okay, we had this situation. We fired everybody because we closed down, I don't know, a dentist's office, right? We let everybody go. We got the loan. We're starting to work. Can I hire back other people and still be able to be forgiven? So that means my employees either don't want to come back, or I don't want them back for whatever reason, and I'm going to replace them with other employees. Can I do that?
Fantastic question. We are going to get to that, and I'll just answer it just in case we don't.
Good.
Yes, you can hire other employees. You will not be penalized for hiring other employees. No
now, some businesses or organizations who either are behind in their payroll, say they got their loan on May 1st, they owe April payroll. What happens if they pay April payroll with this money?
Fantastic question. That is a perfect lead-in, a segue to the $660 billion.
Good. So we'll put that on hold for a second.
Good.
I want to make one comment about the parsonage and the QTR for those who are schools or religious organizations. So as some of you know, we've helped a lot of people with a small local bank who helped a lot of our clients with PPP loans. They've been communicating with the SBA directly, specifically regarding parsonage and QTR. Now, sometimes their communication with the SBA is not exactly clear because they themselves didn't understand what's QTR and what's parsonage. So the response from the SBA to the bank regarding parsonage was that if it's in box 14 on the W-2. Now, I'm not so sure how that can be verified even if the forgiveness will all have to be done, within a couple of months after July 1st. So I'm not even sure, and I'm also not even sure how accurate that is. The QTR, the response to SBA was they said a tuition grant. They didn't call it QTR, so you're probably still right with your opinion, but they called it a tuition grant. They said tuition grants would not be included. So really just to support what you said, we really don't know for sure, although we have a position that we're taking and what we believe is the right thing, but it's not guaranteed. So I'm just kind of just throwing that in. So now you can get into your $600 billion question.
Excellent. And here comes the language of the statute so that you could really understand what the big question is. The statute says that the costs that are forgiven are costs that are incurred and payments made during the covered period. Covered period means the 8 weeks from when you get the money. So what does that mean, costs incurred and payment made? And there have been many, I would say over 50 questions that have that basic question or that theme. If I receive the funds on May 15th, can I use those funds to make the payroll which covers the last 2 weeks? Can you pay ahead on benefits such as medical in order to maximize the forgiveness? Can I prepay my employees for future pay periods? Can I pay my back rent for March, April if I haven't paid it yet? Can I pay May rent if we receive it on May 7th? Can I accelerate my last payroll, which was already incurred, to get it in the 8-week period? Can I pay a year's worth of retirement benefits during the 8 weeks? Okay, so all of these questions, people, businesses, individuals, the AICPA have been begging the SBA for guidance, and the SBA says, it's coming, but there has been no guidance, and people have to make decisions. I will tell you, the safest approach is to follow the strictest opinion. The strictest opinion is that costs have to be paid and incurred. That means if I get the loan on May 7th, then from there, anything which is incurred during that period from those 8 weeks and paid. That's a pretty strict interpretation, but that's the safest interpretation. I believe as a middle ground, instead of paying back rent, from, March, and April, you're safest if you do whatever your normal. So if you haven't paid May rent yet and it comes, May 7th, pay the May 7th. Pay the May rent and it's incurred during that pay period. You'll be able to fill that. Somebody mentioned to me that if it's after June 7th that you get the loan, you'll be able to have 8 weeks to be able to pay the 2 months of June and July anyway. You'll be able to do July and August if it's after the 7th, or you could wait until June 6th to see if you haven't gotten it by the beginning of June, you could take it, wait to pay your rent if you haven't paid your May rent and your landlord is okay with it. Wait and see if you get the money to be able to pay it. If you have a normal payroll that falls on May 15th and it covers the last 2 weeks payroll, I think you are safe for considering that as a regular payroll payment. The government wants you to keep employees on staff. You kept your employees on staff and you're using this money to be able to stay afloat and pay your employees. If guidance comes out that you can't use it on the past, then you'll get it on the back end in the end where you'll have to accelerate your payroll to be able to get there. And that is the basic advice that we're going to give for all of these costs and incurred. You're safest if you're going to do the things where the payments are made and it relates to this time period. I feel, most accountants like to believe that it has to be decided on whatever is incurred because that's what's allocated to that period. Most business owners want it to be on a cash basis because that's the way they work, on cash flow. Like when I have the money, that's when I pay it. So as long as that falls out during the 8 weeks, that's fine. That's an easier way, I think, to be able to determine it. We'll have to see about guidance. So I think the basic idea is just be as normal as possible. Don't do anything out of the ordinary to try to be, chazarish. Don't try to take more than is what is meant by this program.
What's just again to clarify for everybody, because I'm watching the Q&A and it's just hopping with this one thing, paid and incurred. So that means the expense has to be within that 8-week period, and it has to be paid within that 8-week period. The fact that it didn't cash the check is a separate concern, but it has to do that there's no prepayments and there are no catch-up in payments. Some people who owe, payroll. Sometimes it's unfortunately the yeshivas who have more of that, who owe payroll for a month or two in advance. I would assume they have to catch up on that before they can actually pay it, because otherwise, potentially, the SBA could come back and say the payroll you paid was really for, January or February, even though they may not never ask, but there is a chance that they'll want to see that there was payroll paid. You understand what I'm saying?
Yep. That's right.
Okay.
All righty. Moving on to forgiveness reduction issues. These are the things where you get like a penalty, an incentive to keep your workforce at the same head count and the same salary level for those that are under 100,000. They don't want you reducing your salaries by 50% across the board for lower level people, and they don't want you laying off people at all. So question, can I replace an employee? Like Zacharia mentioned before, does it go by per individual or per number? As long as you replace that employee, as long as you don't replace me, I'm irreplaceable, but anybody else is replaceable for the purposes of the PPP. Can an employer hire new employees in the last week of the month? So we said you have until June 30th to be able to rehire them and not suffer the penalty. The answer is yes. However, it's not a game, because if you wait until the last week before June 30th to rehire everybody, then you're not going to be able to spend your 75% on your payroll costs. So you're going to lose there. You might not get penalized in terms of the percentage of your headcount, but you still have to spend that 70, in order to get full forgiveness, you're going to have to spend that 75%. So therefore it pays. They're trying to incentivize you to rehire people as soon as possible. Again, try to do it as normal as possible to be safe. Here's a big question which just recently came out of the SBA's guidance in a new frequently asked question, which is, what happens if I offered to hire an employee back and the employee said no? And I'm not going to get into, I don't have time to get into the unemployment law question, which is a whole fascinating discussion and is relevant to many, many people. But the employee said, no, I don't want to come back to work. So the SBA's guidance is that if you document that you offered in writing this job, and then they responded, no, I don't want to take the job, well, that person will not count against your employee headcount, and therefore you will be able to get full forgiveness. But again, you're going to have to make up that payroll that you're missing, because you have to spend 75% of your loan on payroll in order to get full forgiveness. All right, I'm not going to get into the unemployment. In terms of tax questions, many people want to know, what about the payroll taxes, the employer side of payroll taxes? Is that forgivable? The answer is no. It's specifically in the statute not allowed to be forgiven. You just count the gross wages. Is the accrued interest on the loan forgiven also? Yes. So in other words, it'll be zero. If you get full forgiveness, you won't owe a dime. Is forgiveness taxable income? No. It says very clearly in the statute that there's no cancellation of indebtedness income, even if you borrowed $10 million and you received forgiveness for $10 million, that's not considered income. If you want to know if the expenses that you paid will be deductible, if IRS currently says that it's not deductible because that will be considered double dipping. Members of Congress are trying to force the IRS to change their opinion on that, and that is yet to be seen.
Right, and the AICPA and lots of lobbyist groups are pushing for the same.
Right, right. Can we elect payroll tax deferral and still get forgiveness? The answer is yes, until the date of forgiveness. So this is a rule that a business is allowed to defer the employer side of payroll taxes, half of it for a year and half of it for almost 2 years. So that payroll deferral is still valid, even if you got the loan, you have the money in your bank account. Until you get a decision from the bank that that loan is forgiven, you could still defer your payroll taxes. And as soon as you get a decision that it's deferred, you now, from that point on, have to start paying regular payroll taxes. You still get a deferral on whatever you deferred previously to you getting that forgiveness. Other expenses, quickly. So what about business car leases? So we know you have mortgage interest, not the principal, just the mortgage interest is forgivable, the rent payments and utility payments. What about business car leases? The answer is yes. The SBA interim rule said that business car leases are okay. Cell phones, internet, landlines, all of that type of stuff is considered a valid utility payment for the purposes of the 25%, okay? And if you want to know about the paid versus incurred for utilities, it's the same exact thing. They're waiting for guidance on the rent payments, on the interest payments, utility payments. That's all, we're waiting desperately for guidance for it. I just want to conclude really to recap, because you want to make sure that you want to keep away from anything that looks like business expansion. So any expenses which are to be able to keep the business afloat, keep the lights on, those are the types of things which are going to fit into the 25%. The more things look like, expanding your business, that's not going to be forgiven, and possibly even worse, it might be considered an unauthorized use. So when do you learn the good news? When do you learn that it's forgiven? How long do we have to wait? Do we have to wait 3 years until there's a decision on forgiveness? The answer is, by statute, they have 60 days. And the lender is the one who makes the decision. Might be reviewed by the SBA, but the lender is the one who's supposed to make that decision. They have 60 days from the time you apply for loan forgiveness for them to be able to forgive it. And before we, take any questions, I just want to, give everybody's, appreciate everybody for attending and giving your time, and leave you with a blessing. You don't need my services for helping you with back taxes, and may you all be completely forgiven for the PPP loans and all other averas.
Good point. Some people want to hear a little bit more about the self-employment issues. So what's different with someone that's just, took a small PPP loan for self-employment, and what is it on their end that they have to be looking out for?
The only thing that they have to be looking out for is that the government is saying, you have to give me your Schedule C, and you have a max of 100,000. If you're a person who is a member of a partnership, you cannot apply on your own level. It has to be on the partnership level. But otherwise, the laws are... So
technically speaking, yes. Sorry for interrupting, but technically speaking, a self-employed will end up having to show at least $100,000 in income for the end of the year to be able to take the full advantage of the full PPP.
That is correct. Good point.
Okay, because sometimes you have self-employed who are only showing less. They got on their full 100,000, and then they're going to have a challenge with forgiveness.
Yeah.
Good to clarify. What do we know? I think right now I have two things I want to ask you. What do we know about real estate entities? So let me just tell you quickly where I'm coming from. We do know that actual real estate entity is a challenge. Lots of people got PPP under their management company, and we've gotten from the bank we've been working with, the management company has been excluded. What do we know about that?
Well, we know that passive business entities are excluded from being able to get any SBA loans, and this is included in that exclusion, which means that the actual real estate entities, not the management companies, are not eligible for these loans. But you're 100% right. The management companies, which are you know, they're doing active management, they would be able to apply and be eligible. And that just reminds me, I wanted to make the point, I'm not sure if I made it before, the self-employment income in a partnership or any of these entities, the ones that are allowed to take the loan and therefore the forgiveness are the general active partners, not the silent partners that are there getting their distribution. You can't just take $100,000 and allocate it to them. It's only the active.
Correct.
The SBA clarifies, we want to give it to the people that are working, not the people that are sitting. That's the idea.
Correct, which kind of was the guidance that the bank was getting, and I think there's been confusion. And I also, by the way, think that as the banks are going to work on the forgiveness, there's going to be a lot of challenges with this, because the guidance from the SBA said management companies that are producing passive income are also challenged. That means that's what we're talking about, those investors. There are going to be a lot. I don't believe it's going to be clear cut when a bank says forgiven, not forgiven. There's going to be, you know, positions to take and arguments that we'll have to make in order to be able to get forgiven based on whatever positions and whatever ways we rate the guideline.
Yep.
I still think that some people are a little bit confused with the whole FTE calculation for forgiveness versus the amount of employees. So can we just clarify that in 30 seconds? Again, what are we looking at in terms of FTE?
Yeah. So let me just clarify, because it is a calculation, and for those people that don't do well with calculations, you might you know, glaze over. So if you take the average number of full-time equivalent employees, which is not determined, the AICPA is asking for there to be guidance out. The assumption by most people is it's 30 hours. If you have somebody that works 60 hours, he's not considered as two. He's considered one person. So in other words, anybody who works 30 hours or more, or it's called FTE, full-time equivalent, because if I have 3 people that work 10 hours each, they're considered one FTE. And basically, I could choose 2 particular periods as a business. You're going to want to choose the lower period between these two. You could take the average number of full-time equivalents per month from February 15th, 2019 to June 30th, 2019, that period, or the more recent one, which is the average number of full-time equivalents per month from January 1st to February 29th, 2020. So in other words, you just take those 2 months. You want to take that amount which is lowest. So therefore, if I have just a very simple calculation, if I have $40,000 in payroll costs, and I have $10,000 in utilities. So I have a total of a loan of $50,000. And I had 10 employees in, let's say, between January 1st and February 29th. I had 10 employees. And by the time June 30th hits, I have 5 employees. So therefore, I laid off, 5. I am going to be penalized by losing half of my forgiveness. And therefore, my forgiveness of $50,000 is now going to be dropped down to 5 to 25,000. That's the basic idea.
So you know, and what we're kind of seeing is that the forgiveness to be calculated is the way you just said, FTEs. So it doesn't take into account the amount of money you're paying. So if you're dropping high-paid FTEs, right? You might, or low-paid FTEs, you might gain or lose in that process.
That is correct. That is correct. And that would be a good calculation for each business to do. And that's obviously
okay.
Slash hashkafic question to determine, where to cut salaries and stuff like that.
Right. Okay. So we're kind of wrapped up, I believe, Ahron? Good. So this basically concludes. I just want to tell everybody there's lots and lots and lots of questions and comments. We're going to try to review everything that everybody commented, and we're going to try to summarize this seminar, as well as addressing a lot of the questions that people posted in a follow-up email, hopefully in the next few days. So stay tuned. We'll make sure everyone gets that email. That's number one. Number two, when we have a little bit more guidance, we will hopefully send out to the entire group in a mass email a calculation spreadsheet. We do have some templates that we have, but they're really not ready to be sent because we don't have the guidelines. That'll hopefully make it very, very easy for everybody to plug in the numbers and to be able to see what their forgiveness is going to be. We'll keep you guys in the loop. Everybody on the webinar and on our email list, we'll keep you in the loop of any updates, any changes. And if there is a need for another seminar, we'll do that. Otherwise, just stay tuned with our emails. Thank you very much, everybody.
Thank you.